Hey everyone, Dylan O'Neill here. I wanted to hop on and do a trading recap from today. So today's February 22nd of 2021, and I took two different trades today. I took Microsoft puts as well as Apple puts. Microsoft was the better trade. I netted about 40% profit on this trade. And then Apple was still a great trade, and I netted, I believe, 27% on Apple. Like I said, both were great trades. They worked out very well, and I wanted to go over my thought process between each one. So for me personally, I've said it in other videos of mine, I do not use any indicators. I'm against using indicators at all costs. And what I mean by indicators are, VWAP, MACD, RSI, moving averages, so on and so forth. So my personal strategy only consists of price and volume. That's all you need in my opinion. So we'll get right into it. So for Microsoft, the reason I took this trade is because one, it was showing relative weakness. I'll get into what I mean by that. Two, it was breaking below low of day and pre-market lows. And three, it had a demand imbalance below, which I was speculating that it was going to act as a magnet, and I'll get into that as well. So let's get right into it. I don't want to talk too much BS. Get straight to the point. So I'm going to draw a line right here. I'm going to make it a solid line. I use dotted lines for very, very important levels that can be found on larger time frames. And then I use solid lines to indicate that it's an intraday level, a shorter term level that doesn't mean as much as a dotted line, but it's still important on a shorter term basis. So as you could see, I'm going to use this oval shape. In pre-market, this solid line acted as support three different times, right? You see there, there, and there. So each time Microsoft came down to around this level, buyers were able to buy it right back up and support the price from moving lower. Okay, we get the same reaction when the market opened. So the first three 5-minute candles all touched this level, 236.58, and buyers were yet again able to support the price higher. Okay, so this was a key level that I was looking at for Microsoft. So basically, I started really focusing on Microsoft when it made this lower high. Okay, so at 9:45 on this candle right here, Microsoft was unable to push higher. It started to roll over to the downside. At the same time, QQQ, or the NASDAQ index, was making higher highs. Okay, I'm going to bring this over here. I'll show you QQQ. So let me see something. So this was at 9:45. So you could see at 9:45, Microsoft tried to break higher, but it had to roll over. It could buyers couldn't hold value higher. All right. At the same time, QQQ at 9:45. Let's see. 9:45. So at 9:45, QQQ is breaking above high of day. I understand that it was only 15 minutes into the open, but it was breaking over the highs, and it continued to go higher for some time. Whereas, like I said, with Microsoft, it couldn't go higher after that. So this stock, Microsoft, was showing relative weakness, which basically means that relative to the overall market, it is showing weakness. Okay, so ideally, you want to see Microsoft and QQQ correlate. You want to see both price actions line up very alike. So when you see these divergences where QQQ is going higher and Microsoft is failing to go higher, it's finding resistance, that indicates relative weakness. So I combined relative weakness as well as this support breach, and I bought puts on this candle right here at 10 a.m. So my target, it's very important that before you enter into a trade, you should always have a predetermined exit. Okay? So my predetermined exit for this particular trade was this demand imbalance, okay? 235.09. So as you can see here, I got in at around 236.2-ish, and then my target was 235.09. So basically, as I was saying before, demand imbalances as well as supply imbalances, but for this case we're looking at demand, will tend to act as a magnet. Okay, so it's trading is all about connecting the dots. So like I said, I saw a relative weakness. I saw that Microsoft was breaching an intraday support level, and I saw a demand imbalance below that was in a feasible reach below. It wasn't too far. So all three of those puzzle pieces, came together and formulated a quality trading setup, and that's why I took the trade. So, like I said before, basically a demand imbalance will act as a magnet. Inside of this green rectangle has unfilled orders. So usually the price of an underlying asset will be attracted to this rectangle to fill those unfilled orders. Okay, these are institutional orders that are sitting in this green rectangle that are more than likely going to be filled sooner than later. So, like I said, this was a 40% trade. Very good, and we'll move on from there. My next trade, as I said, was Apple puts. Okay, same idea with Microsoft. It also had a demand imbalance below. As you could see, I'll show where I got in, but basically Apple never hit that. So it's important to scale out of your position. Okay, so say your exit plan is at 125 and you get in at 130 for puts. Okay, rather than selling the full position at 135 or 125, I should say, you should scale out of your position slowly. Okay, so it's important to lock in that profit as the trade is working out in your favor. So the reason I took this Apple trade, we'll get right into it. Apple has a key level. Like I said, dotted line is much more stronger than the intraday support levels. This dotted line, represented by $127 per share, is a critical support level. As you could see in pre-market, Apple was able to find support literally on the penny at 127. It made a low at 127. Buyers stepped in and they drove up the price. On the second time around, Apple failed to hold 127. So on Apple, I got in on this candle right here. Once I saw weakness, you see the volume, the selling pressure increased on the way down. That's a good sign for puts. And I told my members in the group chat that I help moderate, I told the members that a breach under 127 should trigger a move down to 125. Like I said, we did not get down to 125, but this was still a profitable trade. At one point, I believe it was up around 40 or 50%. This one ended up netting me about low 20%. So, like I said, it was still a very good trade, and I stuck to the plan, scaled out as I said before, and the trade worked out well. Same idea, like I said, the same imbalance strategy, right? This also had a demand imbalance at 125.04, which was my ideal exit point. It did not get there, but like I said, because of my risk management and my ability to scale out of the position, it still ended up being a green trade. Okay. I also want to talk about the another reason why both Apple and Microsoft puts worked out well. So I'm going to go over relative strength and weakness in SPY opposed to QQQ. So I'm just going to enlarge these for the sake of this video. Okay. So as pictured, I have a 5-minute chart on the SPY and a 5-minute chart on QQQ. Okay. So this is what I noticed throughout the market session. And this is another reason why I took Microsoft and Apple trades and why both worked out well. So today we saw a rotation out of tech stocks. What that means is that market participants are rotating their money out of these tech stocks and into other sectors such as, it could be banks, airlines, cruise lines, retail sector, so on and so forth. So basically, the way I figured this out was by using price action with relative weakness. So what I mean by that, I'm going to show you right now. This is a very simple yet powerful strategy that I use on an every single day basis. So like I said, SPY is the S&P 500 ETF and QQQ is the NASDAQ ETF, index, whatever you want to call it. So I'm going to use this arrow to indicate what I'm showing you. So at 9:30 a.m. Eastern Time, when the market opened, SPY opened right there, right? Indicated it's when the unshaded part. So this is shaded, this is pre-market, and then when it gets darker, that means the market had opened. Let me zoom in a little bit more, make it clear. Okay. At the same time, QQQ also opened, right? We see these are both 9:30 a.m. candles, okay? This is where it gets interesting. At 10:20 a.m., you could see down here, you'll see the timestamp, right? So if I highlight over this, you'll see 10:20 a.m. At 10:20 a.m., QQQ broke below the low of day, okay? You see this was the first low of the day, or I should say this was, but we're just going to use the 9:30 candle. And then at 10:20 a.m., you can see that this low is lower than this low. At the same time, like I said, this is 10:20 a.m. Look at where SPY was at 10:20 a.m. It made a higher low. So you can see this is the first arrow, and then this is second arrow. It's clear that this one is higher up than this one. This low was 386.74 and this one was 387.23. As you could see, it's higher. It's a higher low at the same exact time, 10:20 a.m. Eastern Time, whereas QQQ made a lower low. This was the first telltale sign that NQ was weaker, hence the weakness in Apple and Microsoft. As we continue going forward, we could look at this next one, right? We see 10:50 a.m. This was still hot and a higher low as opposed to the initial 9:30 candle, right? I'm going to delete this one. So at 10:50 a.m., it was still a higher low. It never broke below low of day. If we go to QQQ at 10:50, you could see it was an even lower low as opposed to the second low of day, or, the second low. So this was the first low. This was the second low, third low. You could see that each time it made a new low, it was lower than the prior one. whereas SPY was higher. So like I said, this was the telltale sign that ES was stronger than NQ. So when NQ is weak, that means tech stocks will be weak. Anything from Microsoft, Apple, Nvidia, so on and so forth, Amazon. So this, like I said, very, very simple indication that tech will be weak. Okay, so like I said, there was a rotation of money out of tech stocks and into other sectors. So we'll get rid of this again. And that's pretty much it. Like I said, I wanted to just do this very quickly, very briefly, and go over some of the things that I personally look at on an everyday basis. You don't need all of the bullshit indicators. Excuse my language. You don't need any of those indicators when it comes to trading. That's just preference. If indicators work for you, then have at it. Go for it. I'm not going to tell you what you can and can't do. But you don't need them. They're not necessary. Okay? They're not critical. You could just use price action as well as volume. That's all you need. So have a nice night. It's late right now. What time is it? I don't even know what time it is. It is 11:44 p.m. Eastern Time. If you guys have any questions, feel free to let me know in the comments below. Have a nice night.